Welcome to Market Focus. In this week's video, we're breaking down the Forex market, covering the most important economic news, how these events impact major currency pairs, and looking at some key technical levels. If you're new here, we cover trading, investing, and financial market insights. Today, we'll be diving into this week's Forex market drivers, both from a fundamental news perspective and a technical analysis standpoint. As always, this video is for educational purposes only and not financial advice. Let's get started. First, let's review the key economic events shaping the currency markets this week. Central bank announcements, Federal Reserve FOMC statement. Traders are eyeing any hint of further tightening or a pause in rate hikes. Hawkish rhetoric could strengthen the US dollar, while dovish signals might weigh on it. European Central Bank ECB remarks, keep an ear out for talk of inflation concerns or economic growth projections. Any adjustment in policy stance could move EUR crosses significantly. Inflation data, US CPI and PPI. Inflation readings can influence Fed policy expectations. Higher than expected CPI might push the dollar up, while softer data might do the opposite. UK CPI, with the Bank of England keeping a close watch on stubborn inflation. A surprise in this number could cause volatility in GBP pairs. Employment figures, Australian employment. The Aussie dollar often reacts strongly to job data, reflecting overall economic health. US weekly jobless claims, an ongoing gauge of labour market tightness that can sway USD sentiment. Geopolitical developments. Any updates on global trade tensions or energy supply disruptions can also create volatility, especially in commodity-linked currencies like CAD, Canadian dollar, or NOK, Norwegian krone. These data releases and central bank statements typically cause increased volatility. Make sure to check your economic calendar so you're aware of exact release times. Now let's see how these events might impact some of the most traded currency pairs. EURs, USD. Investors will be comparing US inflation data against any hawkish or dovish tones from the ECB. If Fed officials signal more rate hikes are possible and US data remains strong, the dollar could gain. Conversely, a surprise uptick in Eurozone inflation or an ECB rate hike hint might boost the euro. GBP USD. UK CPI figures are a big market mover for the pound. If inflation remains high, markets may expect the Bank of England to continue hiking, strengthening GBP. Watch any signs of economic slowdown in the UK that could temper hawkish expectations. USD JPY. The yen remains sensitive to risk sentiment and monetary policy divergence. If the Fed hints at additional tightening while the Bank of Japan stays ultra loose, it could push USD JPY higher. However, if global uncertainty spikes, the yen's safe haven appeal might bring USD JPY lower, despite BOJ policy, AU to USD. Aussie employment data and China-related news remain key drivers. Australia's economy is tied to commodity exports, so watch any developments in global growth sentiment. Strong job numbers can boost the Aussie, while a global growth slowdown could pressure it. Let's jump into the technical side for some popular pairs. EUR-USD technicals. Key support resistance. Support around 1.0800 and 1.0750. Resistance near 1.1000 and 1.1050 indicators. Moving averages, or MA price, hovers around the 50-day MA. A break above might signal bullish momentum, while a close below the 200-day MA could hint at deeper downside. The RSI is near mid-levels, suggesting neither overbought nor oversold. This could mean a potential breakout on news triggers. GBP USD technicals trend leads. An upward trend line from recent lows, but keep an eye out for a break that could signal a reversal. Fibonacci levels. If you apply a fib retracement from the latest swing low to high, watch 1.2500 as a key level if price retraces. Indicators. The MACD crossing below the signal line might point to short-term bearish momentum, but confirmation is needed. USD JPY technicals, horizontal levels, resistance around 140.00, potential support at 137.00. Momentum check. The stochastic is approaching overbought territory, so be cautious of a pullback. A sustained break above 140 could open the path to higher highs, but fundamental triggers will likely be key. AU-USD technicals chart pattern. A rising wedge pattern might be forming, indicating a possible bearish signal if it breaks downward. Key zones: 0.6800 is a psychological level to watch for resistance, 0.6700 for support, EMAs. A crossover of the 50-day above the 100-day EMA might hint at bullish sentiment, but keep an eye on news flow. Given the potential volatility from this week's news, here are a few trading tips. Plan your trades, outline your entry, stop loss, and profit targets before major releases. Use stop losses. Volatile moves can be swift, so protect your capital. Avoid over-leveraging. Higher volatility can magnify gains, but also losses. Stay informed. Watch the economic calendar and keep up with any surprise announcements or press conferences. And that wraps up our weekly Forex market overview. We covered the biggest economic news events, how they might affect major currency pairs, and some technical levels to keep on your radar. If you found this video helpful, please hit that like button and subscribe for more trading updates. Let me know in the comments which pair you're most focused on this week. Thanks for watching and happy trading. Thanks for watching. Subscribe and ring the notification bell so you never miss an update.